Hey guys, welcome back to another Friday episode of the Average Money Podcast, where Brad and I are answering our listeners' questions live here on the podcast. So if you guys are interested in leaving a question for us to answer, we play it here on the podcast. We give our thoughts. Brad and I are not going over what we're going to say, what our answers are going to be, because it makes it a little bit more real that way. If Brad and I want to debate or whatever it may be regarding your all's questions, then so be it. Damn, it's going to happen. So, guys, if you are new here, my name is JJ, and I am joined by the one and only good-looking man himself, Brad. How you doing today, buddy?
Always call me good looking. I like it, but you need new material. I don't want to be good looking anymore. It's like when the girl called you cute. I don't want to be cute. I want to be hot.
Yeah, Brad, kind of cute.
We had a good question tonight. I like talking options. And I also, here's another reason. I want to say this too, because some people will be like, they're talking options. I have no idea. I'm out of here. Listen, because stuff that you don't know now, you're going to want to know later. So just like always use these conversations, even if you are a Dave Ramsey, baby step 2 kind of person. At least listen so when it comes up later, because it's going to come up later because you're already killing it, you'll be like, oh, I know where I can go back. This is one of those days, and Scott leaves an awesome question from a beginner, which might be you.
So today's question comes from Scott.
Hey, Brad and JJ. This is Scott. Big fan of the podcast. I have a quick question for you both. My question has to do with options trading. I am fairly new into the options trading. I haven't done it yet, but I'm looking into starting it soon. With somebody with little to no experience with options trading, I was hoping you guys could go into some detail on how somebody should start getting into options trading. Thanks a lot.
So let me give you the evolution of everyone's options trading career. You hear about selling options, making lots of money. You find somebody that you're going to ask about it. They start talking to you in all these terms and all these things. You have no idea. You get so intimidated, you're out. So you're like, okay. Then you go and ask somebody else because you want more information. And they tell you it's the scariest, most bad thing in the world, and you're going to die, and you're going to lose all your money, and your wife is going to divorce you, and you're like, all right, you're so scared that you probably never look at it again. That's like the route. Now, some people don't have a wife or don't have this. They have no fear. So they don't take that answer from their friend, and then they become Scott, or they become me, or they become JJ. I love these questions, and even when they can be so confusing, the reason I love them so much is because I've been there. So it's really easy for me to reiterate where I was then and what I'm doing now. So my advice, Scott, is going to be 100% from personal experience, and also to give you some of the lessons I learned. And then I'm sure JJ will have a similar story to tell and probably something to add. I pretty much found out about options on YouTube and pretty much the ads and the Lamborghinis. And I went through this similar thing. I got that confusing talk from a friend. Then I got the scary talk from a friend. But I'm like, I can figure this out. There's got to be a way. So I kept asking friends. And I think the first piece of advice and what I learned in that process was you need to find somebody that isn't all for options or all hates options. You need to find somebody that's middle ground, somebody that wants to explain it but doesn't want you to do it. I found in my life, whenever people tell me about things but don't necessarily reinforce the fact that I should be doing it, that's always a great indicator for me that it's something that might be a good thing. Kind of like the people above you never criticize you, so you don't worry about people that criticize you. If somebody wants to teach you options, and I'm one of those people and JJ is one of those people, if somebody wants to teach you options and they'd probably suggest that you didn't start right now, that's the type of conversation and that's the person you want to learn from. So that's the first advice I have for a beginner. The next piece I'm going to go with is start with the wheel, which is selling covered calls and selling cash secure puts. With the vernacular, it's always easy. It's always like people say like, oh, I bought a covered call. Buying and selling is very different. So I personally, as a beginner, am not going to suggest to anybody even my really smart friends, to buy options first. There's just so much time to learn options that buying should not, too many things need to happen outside of your control, right? When we're a beginner, we want to kind of bring our control to as much as we have. And when you buy options, that's not going to be the case. So let's sell options first. So then we can kind of narrow it down to, all right, I'm going to sell a covered call, or I'm going to sell a cash secure put. Really, the simple difference between the two is the collateral of that option that you are going to use. Are you going to use 100 shares of a stock that you own as collateral? Or are you going to use the amount of money to purchase 100 shares of a stock as collateral? For me personally, and this is a mistake that I made, I started on the cash secure put side. And I said, I have this amount of money. I'm going to do that. Now with that, you enter options immediately. You can literally say, like, I have $5,000. I can put up a strike price of $50. That's fine. The reason that I now wish I started with the covered call, it comes back to more time and education. Not many people can just purchase 100 shares of a stock right off the bat. Most people are going to be building to 100 shares. Now, as I was building to 100 shares, I started saying to myself, okay, well, what am I going to do when I get to 100 shares? I'm going to do two things. I'm going to look at what's the average cost that I paid for those shares, and what would be a price that I'd be happy to sell them. Those are really the only two things you need to know about a covered call. Because when you write the covered call, the thing that they call the strike price is that price that you'd be willing to sell. Let's say you get to 100 shares of AT&T and you're at a strike price and you're at a cost basis of $25. And you're like, if this thing ever gets to 30, I would sell all these 100 shares. Like, I'd be super pumped if it got to $30. Then you set a covered call at $30, and that's the end of the day. Now, a positive byproduct of that is you're going to collect some premium. Somebody else is going to pay you money to enter that contract with them. That's a beautiful thing. Don't do the reverse. Here's my next piece of advice for a beginner. Don't enter a covered call or a cash secure put according to the premium that you get paid. That's greed. Don't think about, oh, I'm going to do this. I'm going to go closer to the money because that's going to get me more premium. Nope. Look at that basis of what your basis is, what you want it to be. That's the end of the day. Now you might get to the point, and here's the last step, and then this ramble will end. Once you either have two options after you know you're going to get to 100 shares and you're ready to do this. You are going to go back to that initial friend that you felt faith in, or you're going to ask him where he learned from or she learned from, and you're going to go to those resources. So I'm going to do that right now. And I've really never really even said this. I had that friend, got me there, couldn't really get me much further. The resource I used to build me from where I am then to where I am now is an outstanding YouTube channel by Adam. And to be honest, I've reached out to him. He's a busy dude, hasn't gotten back to me. I know he's not blowing me off. He just hasn't gotten back to me, but maybe you guys will tell Adam if somebody knows. He has a channel called In the Money, one word, on YouTube. His presentation of options is so incredible. So obviously I want you to go to Brad Finn and type in Brad Finn covered call, Brad Finn cash secure put. But let me be that first friend. Let me be that guy that's giving you getting you to want to buy 100 shares. When you get there, look up Adam or look up JJ and get that second step. It snowballs really, really quickly. Once you sell your first covered call, the rest is history.
Yeah, I'm going to second that on Adam's channel. In the Money is a excellent resource to get a basic understanding of options, but also get a little bit of advanced understanding of options. So a great plug there, by the way. And I definitely think it'd be a cool episode to have him on there. We need to try and reach out to him.
I did. Hey, we all know that when Brad DMs somebody,
here we go.
It's 32,000 subscribers. Does this guy know who? When JJ Buckner drops a DM, everyone gets hot and bothered.
No, not at all.
Because you just yikes.
No.
So maybe you should reach out to him. While you're at it, can you call Mr. Money Mustache? Get him on.
No doubt, man. That'd be sweet. But no, so Brad, I mean, you nailed it, man. There's not much that I have to really explain on top of that, but I will take it maybe a little step further. So you nailed it with the wheel strategy. I do agree with that, but I think even that can be a little too advanced for sometimes for beginners. So from the wheel strategy, Brad mentioned covered calls and cash secured puts. One is selling calls, one is selling puts. What I would recommend is a beginner to focus on one of those first. Don't worry about the wheel option, the wheel strategy. Don't worry how it works. Don't try to understand all that. Focus on one of those first. You make a decision that I'm either going to start selling covered calls or I'm going to start selling cash secured puts. Whichever one you decide, you hone in on that and you try to understand every single thing you can by watching videos, reading books, reading blog posts, whatever it may be. I think that's very, very important. And then learn about the next one and then learn about the wheel strategy. It's kind of like a stepping stone. The next thing I do want to mention is, Brad, you said that you would never say like to go buy calls. So let me ask you this then, because I think this is something that if I was like thinking of me as a beginner again, I would be okay doing this knowing what I know now if I was a beginner, and that's buying like a long-term call option. So if you're buying a long-term call option, you're putting an expiration date on like 2 to 3 years out. So now practically you're basically owning the stock. Like usually if you're buying a option in the money, at the money, or out of the money within like a month's time frame, no one has any idea that what that stock's going to do in a 4-week span. But if you're talking 2 to 3 years, typically a stock is going to go up in price. The stock market has a historical average of 6 to 8%, and generally it is going up every single year. Occasionally, if we have a crash or whatever. But that's something else that I think a beginner could get a good spot on to start is buying those long-term calls.
I'm going to rebut.
Okay.
You use the word typically, and I want to just explain to you what that word typically means and why I'm still not going to buy things first. And it's back to the thing where I said, let's try not to F up the least. And I'm going to put the ball in your court here. I said one of the benefits of selling covered calls and cash secure puts is you get to choose your strike.
Well, hold up. Before we get any further, I will say that I'm not debating on buying calls before selling calls or buying puts before selling puts. So I want to make that known.
So what were you saying about you saying that it might be a good option for somebody to try and buy
if somebody wants to buy an option for a chance to make 600% in premium because that's what they're interested in buying options, then I'm going to say buy a long call.
Right. If someone's like, I'm not going to do the wheel first. I'm not going to sell. I'm going to buy. Okay. Yes. I'm going to tell you as far as possible.
Maybe somebody's not looking for $200-$300 in premium. Maybe they're looking.
Yes. I'm going to tell them to go far as possible.
Yes.
Now, somebody that wanted to debate with me why it shouldn't be a first play, because I'm sure there's people that would be. When I say that you can sell your strike price, that's the price that you want to sell or you want to buy. Your worst case scenario in a selling options scenario is you are either getting 100 shares at the price that you wanted, or you are selling shares at the profit that you wanted. Now, in both cases, right after that worst case scenario, your put gets assigned and you have to buy 100 shares. The next day, you are going to write a call against them, collect more premium, just sell them back. So that's not a big deal and be right back where you were 2 weeks ago. The other worst case scenario is it gets assigned and you have to get those shares called away. Well, you already chose a price. Then maybe you chose the wrong strike price and that's a lesson you're going to learn. So for me, I just look at worst case scenario. Worst case scenario in a buy option, it does expire worthless and you lose all of the money. That's kind of why I don't like spreads and things like that too, because I always want there to be shares transacted in worst case scenario. I always want there to be, I want it to
Some
be
sort of ownership.
Yeah, I want there to be some sort of ownership or shares or money. I want there to be an exchange of shares, one way or the other, giving them away or getting them back. But with spreads and things like that, where your worst case scenario now is money, and people could say like, well, if you sell a call, you sold it, but it went up 100% past that. That's not like a loss. That's a crap, Or that's a like, oh, what if I would? But I don't know. I'm for buying. I'd buy options, but I'm saying you should, and this goes to your point, like learn everything first to the max. Like it should get you to 6 months. You should take you 6 months before you buy your first option.
Yeah, I agree. And I think it's also very important to note that Brad and I both did start options trading by selling calls and puts.
Yes.
Neither one of us were buying. So that is something to note there, that as a beginner. I do take that back.
I was going to say.
My first option, my first options trade was I bought a put, which actually would have been, now that I look back to like beginner JJ and like what could have happened, I could have made a killing off that trade. I bought a put against American Airlines right near the beginning of COVID because I knew their balance sheet. I knew they weren't a safe company. I knew it was going to go down. Travel was going to go down. And I bought the put. And what happened is with Robinhood is my limit order I had set was like right in the middle. And by the time the market opened, because you can't make trades, after hours or whenever the market's closed, already the price has increased, meaning the amount of money I could have made would have already been killer amount. It increased so much that my limit order was just out of the question of getting filled. So that was technically my first order I've ever placed. But the first actual order to go through was me. I actually sold a covered call.
And I kind of I'm going to wrap up my piece with that because I remember, and you can call me a liar, when that happened, it kind of gave you a bad taste in your mouth. And at the time I've been selling calls and puts, and I don't think maybe we were on the same page of what we were doing. And it comes down to my final point. If you're a beginner, like, if you're against trading options, say no, but not really mean it. Because when I kept saying to JJ after that video and that happened and it just didn't go right, it didn't feel right. And I'd be like, get back on board, try these calls, try these puts. And he was always being like, nah, it's not my thing. But I know you didn't really mean it. So keep an open, what I mean is keep an open mind. If you hate it now, I'm telling you, there's nothing really to hate. Just maybe you have a little bit more to learn, or you need to learn a different strategy that's good for you. Saying you don't like options is like saying you don't like sports. There is a soccer or a football or a baseball or something out there for everyone, and they're not all the same. Not all sports are equal. Not all options are equal as well.
Yeah, I just want to say that, Brad, you nailed it at that point. I guess I will owe all my options profits I make. Thank you to you, because you did keep me on board, to be honest. And I will say this, like, I feel like so many people are strayed away from options trading because they think it's this very complex, the stock market's already, confusing in itself, and options are just a whole nother level where the higher ups are, they're the only ones that can touch that. That's not true. It's just like anything in life. If you just take and learn the basics, this can be a very profitable way to earn some extra income. Brad, correct me if I'm wrong. You earned a decent amount, correct? From premiums on like selling covered calls and cash secured puts?
So my public options portfolio, I'll give you some numbers because the year just ended. I don't know when this is going to come out because we're kind of filming out, but
yeah,
I started the Robinhood options like on my YouTube channel, which is documented, about mid-May. Okay, so $0 premium made in May. I finished off the year with a portfolio that never went higher than $12,000, that sold primarily the wheel strategy with 4 stocks under $50. And I think I made $7,000 in premium from May to December. And during that time from May to November, I didn't buy any options publicly. but now I'm doing that, and the 2023 buy options that I have that are open are probably in the neighborhood of another couple $1,000 of potential profits, not counting growth in just collecting on things that aren't like wacky, like Wells Fargo, AT&T. Those premiums are like $10, $12 weekly.
And stocks that you're okay to own if you have to own them.
Yeah. I was okay. I mean, I have a history with Wells Fargo, and we can talk the wheel for days, and it's hard on a podcast. It's better off if we do it on YouTube one day. But the reason that I broke even on Wells Fargo was essentially when I sold the premium, I subtracted that from my cost basis. So I used the premiums that I sold my calls, my puts on to lower my cost basis. I have some stocks in my portfolio where if you subtract the premiums paid from the money I put in to get the 100 shares, I'm even. I'm playing with house money.
And hedge funds do that. They hedge their bet using options. I mean, it happens all the time. It's just your typical average Joe American knows nothing about it.
We digress. We digress from options. We can talk options. It's hard though.
It is, but that's why we also love options though. I mean, it's definitely a whole nother good income source. And I do think somebody like Brad and I, who, we are like the typical just average dudes, that usually when you hear options, it's like some big Wall Street guy or whatever, or some dude like on a jet. Like, no, we're just two typical dudes who trade options online. And, we've started from not barely knowing anything, and it's definitely taking some mistakes. You know what? There's one thing I do want to add in here now that I'm talking that I thought of is maybe think about like opening up a paper trade account and paper trading options. That's basically using fake money. And you can do this with a platform like TD Ameritrade, Thinkorswim, where you get a certain amount of set of fake money and you can go use options trades. And the good part about this is you get to practice just how setting a trade works. How does it actually work to go sell a call? What do you have to do? What buttons do you have to press? So it is really nice to be able to do that on fake money before you're doing it on your own money, where it could be a bit of a loss if you don't know exactly what's going on.
The rules of options are the same as the rules of life. Don't worry too much about what other people are doing. Don't really be too greedy, because greed will get you. And if you don't know something, ask somebody, because the guy standing on the wall doesn't learn anything.
100%, man. Well, Brad, I'm going to wrap this one up, man. This was a great question from Scott. And, like I said, options can be scary. It can be something that maybe seems a little advanced, but once you really get down to the nitty gritty of it, if you have been investing in the stock market, it is maybe something you want to think about, at least looking into, to see it being a whole nother income source or whatever it could be. But guys, without further ado, that wraps up Friday's voicemail, or whatever we want to call these episodes.
Is it without further ado when you start something, not when you end something?
Well, we're going to roll with this one tonight, Brad. Okay. Without further ado, we're ending this thing. But no, guys, again, we really do appreciate it. We thank every single one of you who are listening to the podcast. We are growing, so that's exciting. But guys, if you could, please leave a review. It does really help out the podcast. And you can do that just by going to Apple Podcasts if you're an Apple user. But guys, I'm going to end it here. Thank you so much. And until the next one, you guys take care.